Good morning and welcome to the second last day of winter. And here we're looking at the Dow Jones transports. And the reason for this is that I'll just sort of discuss what I know and what I don't know. And this this particular daily chart here for the Dow Jones transports, the reason that that I like it is because of its wave structure coming down. In terms of, it's quite easy to see down for one, back for two, down for three, back for four, and down for five. Now, the Dow Jones never made this extra low down here in relation to this low here. It's basically had its correction from this point here, and it's had it through here, and we figured that it would come down eventually. It doesn't seem like it will at this stage. It's still a possibility for that, but we have to look at the larger pattern in a slightly different way. So we have to look at this now as this is a five-wave structure to the downside through here. Yeah, and we'll look at this in the Dow Jones point of view as well. And then we need to look for, once we've got five waves down, then we can look for three waves up. And it's normal for the target to be at the 61.8% retracement level. So we can look at it at around this level. But look, anywhere between the 50 and the 60 is fine. In fact, anywhere between the 40 and the 70, sort of 75% is also a norm as well. What we normally look at is working with numbers, and in this particular case here, we would be looking at 5,000 and also the supply levels as well. So it's not difficult to work out, to see through here the support level or the resistance level that it's going to be now. So coming back up and retesting the 5,000 here for the Dow transports is certainly on the case. And that's the pattern that we'll be sort of looking at. And yeah, so that's sort of it really. So we need to sort of relate this to the S&P 500 and the Dow Jones. So we'll do that now. But I just wanted to point out here, before we move across there, is the difference in the where is the actual difference in the structure. And this is where I think that the difference in the structure is that in this one here we've got this is the actual high here, right? So that's very sort of clear there. So this particular move down through here is wave one, and this one moved back through here is wave two. On the Dow Jones, this wave two here moved back up here. It stayed lower, but only a few points there. So I'm thinking that this move back up through here was actually a part of this here. So let's just have a look at the Dow Jones there, and you can make up your own mind in how we see that. So this is the Dow Jones here. So first of all is this little bit here that I talked about here. Now this high here is just a tad higher at 57.54, and this one here is at 7.51. So the 3 points difference there. It's only 3 points, but when you're using Elliott, it is important to make sure that doesn't go above that high there, and it didn't. So we just assumed that this was down for wave one and this was back for wave two in that case. And I'd always been looking at the Dow transports in terms of its pattern, but I stayed with this situation here. So this move down through, we need to really consider this the high point here, and this is the five wave structure coming down through here. And then in that case, then we would look for a 61 point retracement level back up. So we need to look at this here as being the five wave structure down in here. Yep. And then we need to look at this here as the 61.8 retracement level from here. And to do that, we would be taking this high here and that low there and coming in there roughly. So we'd be looking at somewhere between the 11.8 and the 12,000 there as such. This would also bring in, as you can see through here as well, it would bring in these lows here. So this is where the sort of supply would start here. And that's why a market moved quickly through here, because stops get taken out under previous lows, and traders know where stops are sitting. So anyway, what we're looking for is we're looking at this possibly being now the A, the B and the C wave back up to there, moving back up 61.8%. Now, in this move coming up through here, in an ABC correction like this here, then there's a certain structure to it. This wave here would be the C wave, and that would have 5 waves in it as such. Okay, and where I think that we are now, I think that we, in this 5-wave structure here, I think we're in the 3rd wave here somewhere. Okay, so we've still got more to play out here. That's why I think that would be up at these sort of areas here. Now, the levels here, and as I mentioned before as well, is that to turn bullish, we would need to be looking at 11,500 as support, and the current price now for this from last night is 11,539, I think. So it's just above here somewhere. It's just poked its head up there. So but we need that as support. So we need to have that as a clear supporting position through there. And I think that this, in that 5-wave structure that I just mentioned here, I think that it's a bit like this here. So I think that this is up for 1 and back for 2 here, and we'll be looking up for 3 and 4 and 5 coming up into this area here. Now, once this is complete here, then we'll be looking at this to move over to the downside as such, based on this 5-wave structure here, and we see quite clearly on the Dow transports. So this leaves our local markets in the same sort of boat as well. So when we're looking at our local market here, obviously this is a different picture here, but what we've concluded here in terms of the levels is that, yes, we understood that the market was above the 4,000 there, so it was sort of in a positive mode, but we also figured that it was a corrective mode, and it would stay in that corrective mode until we found support on top of 4,300 here. Yesterday in the SPY there, we were looking at putting stops under the 4,200 here to trade to the long side. But in relation to stocks and the bigger picture, we needed to see the Dow on support at 11,500, and also here we want to see support on the 4-3 here, because this is the top of group 1, 2 and 3 here, and what this will do, having support on top of this level here, it will enable us to get up further. But in getting up there further as well, this is where the supply is going to be here. So from the sub-levels point of view here, the 4,450 is really going to be the tough nut here, and also this whole sort of structure between here, this is where it's going to be struggling from. So even once we do get up here on this one here, then we'll be facing supply there. And also with this as well, just pointing out that the 61.8 retracement level for this one here from our high up here is about in the same zone as well here, in the 61.8 here. So the 4-5 is what we'll be targeting for, but the supply will come in around the 44.50 there. So that's what the target there will be. But the other thing is that stocks make up the indices, and stocks, if this was struggling at 4-3 here, it doesn't mean that stocks will be stagnant. Stocks tend to sort of run on the general consensus of something being positive or negative. So we don't necessarily have to wait here for support when we're actually trading stock. So What you can do in trading stock, though, is just make sure that you're not facing, this is a medium level here, the stock that you're trading, that you're not facing the medium level. Make sure that you're above it, because being above it, what it means that it's taken out all the sellers at that, say, that medium level or major level or even minor level as well. So you can look in the market depth. If you are under a minor level, then you can look in the market depth and you'll see that the sellers will be at that minor level there. So it's better to have them cleared out of the way, and then you're free to go to the next number. It's just an emotional move from A to B, basically, and you need to make that as clean, as simple as possible, and that's why you're better off trading above the closest largest number rather than facing it. Okay, so with all that in mind, we can just run through the intraday stuff, and as I've been sort of mentioning that it's the copper market, the base metals that we're driving, followed by closely the Australian dollar. And then everything else falls into that. There's many times that we've used the base metals, the copper and the Australian dollar, to view things. I was a little bit slow off the mark in this case. I've been sort of 2 days behind the 8 ball, so I apologise for that. I sort of got stuck on the 4,300 for our local market and the 11,500 for the Dow. I didn't think there'd be so much volume coming in the market today because of what's happened in New York with Irene, but there we go. There's certainly an emotional push to the upside. The reason that I also feel that it's corrective as well, this is the Dow Jones here, the US 30. Now, the reason I feel that it's corrective is because of this move here. This move up through here is in a very clear 3 waves, an A and a B and a C wave here. So this is the basis for this rally to be corrective. Now, if the market fails for some reason here, which it still can do, then that's fine. It can roll over and we'll have that wave 4. That's fine. But we're just exploring to the upside, and we'll be considering this a wave 2 to the upside now. In this move up here as well, we'd have to consider this being up for wave 1 and this back for wave 2 at this point here. So this is a 3rd wave moving up, and then we'll have a 4th, and then we'll have a 5th wave moving up for wave 2 here. So we can call this down here, I've already got it labeled there. So wave 1 here, an A and a B and a C wave for wave 2 there. There is a possibility that this B wave can be this wave 2 here, in fact, in terms of an A and a B and a C here. Bit unlikely, but it's there, and I'll just point that out for Elliott people. But essentially, this is a corrective move here. The B wave and 5 waves for the C wave in terms of 1, 2, 3, 4, and 5. This is a 61.8% here. The supply for the Dow really starts to kick in at the 12,000 here. The 61.8 is at the 11.8, and the 800 is a profit-taking number. It will be hit there, and we will see that go there. But like I said here, we just need to find a good support on here. Because it's a 3rd wave coming up here, it may not be finding that much support. It may just sort of blast on through. Then you need to use your sub levels if you're trading this market to the upside. The S&P 500 will be the same as well. The same with the FTSE as well. In terms, I've got this labeled a little bit differently here, but would have to consider this wave 1 here, wave 2 here, wave 3 going up here, and showing the nature of wave 3 as well. This dotted line going through here, coming into this 1272 area here, is a likely target for this as well in here. Still calling it wave 4 in this case here, but just consider that we may have to be using this as wave 2 here, and this is wave 1 down through here. I haven't changed it yet because we don't have confirmation that is the case, but we'll just see how we travel with that. The Dow 11,500 is the same as 1,200 here for this market here, and you can see that yes, it's traded above it, but we'll need to see it, check back. We need to see some sort of small correction through here as a checking of support. If that's not the case, because it is a third wave through here, then you need to trade 12.10, 12.20, 12.30, exit at 12.30, wait for support, and then get back in. And the UK market's the same as well. It's the same pattern. You can see this particular pattern through here. This is corrective. So we're just changing this over now to the A, the B, and up for the C wave. We just may be changing this here for a wave 2 here rather than a wave 4, with this being a wave 1 down the bottom down through here, but that's not confirmed yet either. It would need to take that high out there before we could change it in this particular pattern through here. And the ASX here, looking at this in terms of an A and a B and a C for the B wave, and then looking for the C wave up through here. Now, I've also got this labelled in two ways here, in terms that I've got it labelled in up for 1, basically back for 2, up for 3, and back for 4, and up for 5. Now, I don't think that's right, because we've got wave 4 here overlapping wave 1 here, so that's probably not correct. It's probably more correct to have this up for wave 1 and an A and a B and a C back for wave 2, and this is the actual third wave moving up. So it would move up much further than this up here, but what we would be looking for here, and what you should be looking for here, is support on the 4-3 here. And in looking for support on the 4-3 here, you would need to take in consideration group 2 under here, the 65, 72 and the 80 as the support, and the resistance would be group 1 here. So we're likely to see some sort of correctional element through here, on here. So you just need to be very careful through here on this. Okay, so the drivers, one of the interesting things here, I think, is the copper market, and I'm just going to bring that up first. So this copper market here, its wave count here, we've been been right here, and the good news here, that in being right here, it gives us a very clear sort of forecast for this particular market here. And what we're looking for here is, if you can follow this a little bit, is that we're looking for wave 1 here, wave 2 to here, and that's your A, your B and your C correction for here. And then we're looking for, that's in brackets, so we're looking for, in brackets, we're looking for the third wave up, which is not complete yet, but we're getting there. So we've got up for wave 1, back for wave 2, and then we've got up for wave 3 here. And in wave 3, there will be 5 waves in there in terms of 1, 2, be 3 waves in there, the A, B, C for the 4th, and up for the 5th to make the 3rd. Then we've got some sort of 4th wave correction across here. I haven't sort of broken that down too much. But then we'll be looking for, bear with me here for a second, we'll be looking for that over there. We'll be looking for this wave 5 to come in through here. And if that's wave 5 there, then it should have some sort of relationship. Wave 5 should be the same length as this wave 1 here, because of the extension in wave 3. If you get an extension in wave 3, then wave 1 here and wave 5 will be about the same in terms of time and size. So we could be looking at that there. So we'll be looking at this wave 3 here, here. We'll be looking at that wave 3 here, and then we'll be looking for wave 4 coming back, and wave 4 tends to, I haven't got wave 4 tends to, this wave 4 here rather, that should come back in terms of to the 3rd, 4th wave of 1 lesser degree. So it should come back to this little wave 4 here, and then we should see wave 5 up. But we shouldn't really expect too much in wave 5 either, because when we come back here, we can see that wave 1 here was very short. So this distance here would be the distance of the wave 5 here. So we're not going to see very much. And as I mentioned some time ago, that when this all started, the 420 here would be about the right target zone that we'd be looking for here. So that would still be the case. So we'll be looking into there. So we're looking for a wave 5 to make 3, then 4, then 5 through here. Not to say that this will come back through here. This may just sit back up into here somewhere, but you can see that the one, that, and then that through there. This should also be the top of the indices at this particular time as well. That's the interesting part that that I wanted to get across here. So we can follow this wave count here, and it should give us a bit of time there as well on this. Now, so we're still expecting a couple of weeks or so for this to move up there. Sort of a good 7 days or so. So anyway, we'll see how we go there. And with oil will follow stock. So we're looking for this to push higher as well. So from this point here, we'd be looking up for wave 1 and back for wave 2, and then wave 3 would be up for 1, back for 2, 3, 4, 5 into here, then 4, then 5 up to here. So we'll be looking at a retest into the 90 here for this, but this will obviously follow stock. So we'll just have to wait and tune that in with that. The gold market is doing pretty much like we sort of expected it to do in terms of the larger ABC pattern, in terms of this A wave down here, a B wave back up through here, and then a C wave down into this area here. Now, the C wave normally comes down lower than the A wave here, so we can kind of expect that, but it's more important to actually track the wave count as it unfolds through down here. In terms of the trading levels here, it hasn't actually left the 18 here, so it would need to retest that. It does appear that we've got down for 1, back for 2, down for 3, 4 and 5 here. So this is obviously the support down through here at the 65, 72 and the 80 here. This is subgroup 2 area here, and you can see that it's support there. So we could look for 5 waves down to here, 3 waves back up to retest 18. If it fails from there and then starts to move down, then that's where the short trade would come into play. But at the moment, it hasn't actually retested that and rejected it. Do you know what I mean? It has it in its little structure here, but we need to see it from this 5 wave structure here in terms of down for 1, back for 2, 3, 4, 5. So we need to see go back up there one more time and reject it there and then roll over. That's where the short would be, and then use the triggers through here and keeping the stop there. If you're short already, then the stop would have to be above this little guy here, just in case that this has got more to play out in terms of the B wave here. But so far as it goes, this B wave has moved back up 61.8%, so that's always nice. But we were also looking at this supply area within here as well as pegging this here. So the sellers have moved from here to here to here. These fast moves here, as I mentioned before, normally happen under the previous low, and that's what a third wave is. It trips out the stops, and then it moves quite quickly, but a third wave moves quite quickly anyway. So that's all into play there. The dollar, okay, so this red line that I've got here at 73.42, if we have a look at that in terms of the actual index, just bear with me a second here. Okay, the index. So this is the index here, and it's this low here that 73. No, it's not that low, it's that one. Beg your pardon. It's that low there that if that's taken out, then we've got a larger bearish picture to the downside there. And what this will do, this will, whilst stock is pushing up, then this has got a chance to push down through here. If that had failed at the 11,500, and it still may with the Dow, then this would be safer here and this would push up from here. But a breaking of this low here simply puts this price back down, not only at this previous low here on this daily chart, but down at the 72 mark here. So yes, there will be support here, across here for that. We'll see a bounce at the 72 area, but it would be down here further from this. So the other important thing here, if it breaks this low through here, that means that you can trade long on the euro. Okay, and on the euro, that's that line through there at 73.42 on the actual index. These are futures contracts, and these are CFDs on futures contracts. So yeah, so on the euro here, I just also wanted to point out here, this is the monthly chart here, and this is the medium level here at 1.5. Okay, so you can see that that is the resistance. We've got these lower highs here, so any move up through here would be struggling into the supply zone, and that it's risk there. This is where it's likely to fail, if it's going to fail. And while the Dow is pushing up, then yes, this will tend to push up higher here. And you can sort of look at to the 148, 8's the profit-taking number into that. So it would only really be long on the euro in terms of a long-term trend if we'd found support on the 50 there. And we may do that, It's quite normal for this to push up through here, react here, come back, find support, and then chuff along up here and make the first high above the level. So we'd be looking for 5 waves up through here, and then we would look for an A and a B and a C correction, and then back up there. So there's a long way for that to go. There's not a lot of action in here, and that's why we haven't really sort of focused on it. Now, the support is actually in the bigger picture here. The support, just to point out here, is at this low here at the 120 there. And that will also be in a bigger picture still. And then from this support here, we've got other supports, but this is the main point here. The 30 and the 40, and it's developing on the 44 across here. That's why I put that dotted line in through there. That's the 144, the Fibber number, and the current price is at the 145 at the moment. So you can see 145 here. And what I wanted to point out here is that this last move down here has been in 5 waves. Yes, it can be the A, the B, and the C wave through here. So any moves to the upside here, this move down through here is in 5 waves. We can just go over that. This is down for 1 and back for 2, okay? So now we're going to go into the third wave, and the third wave would be down for 1, back for 2, nice strong third wave, 4th and 5th wave. So that's the third wave there. So that's 1, 2, 5 waves down here for the third wave, the 4th wave pulling back to the 4th wave of 1 lesser degree, and then the 5th wave coming down through here. So we've got 5 waves down there, which could be the C wave, or yes, probably that. So any move up through here that you're trading when the market opens is that, yes, 145 is support, but what you'd be looking for is support on the 145.10. Yeah, you need a solid support on that. Then to get up to here, you can either exit here and then get back in here, but the normal thing is to trade from this level here up to the top of subgroup 1, 2, and 3 here, and exit in here. What I wanted to point out though is that there will be, if it does move up from here, then there will be a corrective pattern across here, which should stay above the 45.20 here, or the sort of the 17, whatever. But expect a move up through here, have a decent correction across here, but after it's had its correction, if it finds support after that, then you can trade it long to the upside. So just be a little bit aware of that. And the Australian dollar, from this high here that it's had all the way down through here, the 61.8 retracement level is doesn't want to show up there. Oh, there it is. Well, anyway, that's it. That dark line going through there, that's the 61.8 retracement level from this whole move down through here. So we have to expect resistance there. But you see that little group just here? That's the supply there. So that's where you're likely to find the resistance there. So you want to be trading it to that point. And looking at it, it's moved along a little bit here. So looking at it from this point of view here, say from this point here, we can see that this is a really nice, strong wave structure here. So that's likely to be the third wave, isn't it? This is likely to be the wave 1 in here, the 1, the A, the B, and the C for 2. This is the whole third wave going up through here. May not finish sort of through here, but that can be 5 waves from here now, the 1, the 2, the 3, the 4, and the 5. But it does appear to be wanting to push up a bit sort of higher there. Yeah, I mean, the trouble with this is that the market, the horse is bolted. Do you know what I mean? So you have to wait for a nice sort of setup, and this is the beginning, this is the middle, and this is the end. Now the end here may end up here, and then we get the correction across here. So yeah, it's just a little bit tricky here, but. Anyway, just see how it reacts at the 65 first. If you get support on top of the 72 here, then you can trade long from that point. It's just that you've missed the run from here. That would have been the point to trade it from support on the top of group 1 here, up to the midpoint, exit, wait for support here. It will probably push up here today, but it's just I just don't know if you're going to get another correction in through here to rebalance this up through here. Anyway, getting back onto stock, we've got quite a few shorts in the market. They will be triggered out, and we'll look for a few long trades to put in, but there'll be short-term longs as well. So you'll have your own, and you've probably already been long. Just either use the daily robo or the weekly robo, and look for support on 4,300 for our local market and 11,500 for the Dow. And once that's the case, then we can be sort of assured of more upside there. And the wave count, the whole move up being a wave 2 and moving, if it fails at 11,500, then you know that we're still in that wave 4 situation. However, if it does find support, we know that we could start to look at 11,800 and 12,000 for the Dow. That will give us some sort of room to look forward to the upside on our local market, which we can start looking to at 4,450, but more so 4,500, the midpoint there where the supply is. So it does give us something to aim for, and that's what we'll be shooting for. Alrighty. Just one other thing as well is that on the GFT platform here, I've been creating the templates for stocks and indices, and I'll shortly do the FX as well. So for the people that have actually signed up for a real account on the GFT, then I don't mind working with those guys to or girls to get the trading levels template as a layout on your own on your own platform there. Alrighty, well, good morning and good luck.